Imagine a world where the dominance of the US dollar, USD, is no longer as unchallenged as it is today. A world where countries explore alternatives and build stronger financial connections without relying on a single currency. This is the vision of BRICS nations, Brazil, Russia, India, China, and South Africa, as they discuss creating their own currency. But what would this mean for the global economy and, in particular, the United States and its trade relationships? Let's explore. Trade growth among BRICS nations. Trade among BRICS countries has grown rapidly, reaching $500 billion in 2023. China is a dominant player, trading heavily with Brazil in soybeans and minerals. India and Russia focus on energy trade, while South Africa strengthens its ties in mining and raw materials. This intra-BRICS network shows how their economies are increasingly interlinked. But when comparing this to their trade with the United States, the figures are striking. In 2023, BRICS countries traded over $953 billion with the U.S., underscoring their reliance on the U.S. market. What happens if these countries start reducing their reliance on the U.S. dollar and opt for their own currency? The potential impact on the U.S. dollar. The U.S. dollar has long been the dominant global currency, involved in 88% of global transactions. This dominance gives the U.S. significant financial influence. If BRICS nations move to a new currency for trade within the group, it could decrease demand for USD. China, for example, has already used the yuan in trade with Brazil and Russia. If more BRICS countries follow this path, it could lessen reliance on the U.S. dollar, causing fluctuations in its value and increased volatility. Additionally, fewer transactions in USD could decrease demand for U.S. Treasury securities, making it more costly for the U.S. to borrow money. BRICS intra-trade versus USA trade. The numbers. In 2023, intra-BRICS trade totaled $146.2 billion, compared to their $953 billion trade with the U.S. This highlights how much more BRICS relies on the U.S. market for trade than on intra-BRICS exchanges. It shows how BRICS nations are still heavily reliant on the U.S. for trade. The question remains, what if BRICS begins trading in its own currency? The U.S. dollar's role in global trade. The U.S. dollar's dominance in global transactions provides stability to global finance. It gives the U.S. significant economic leverage, but if BRICS nations begin using their own currency for intra-trade, the dollar's dominance could be challenged. Such a shift would take time, but it could decrease demand for USD, leading to potential volatility and costlier U.S. government borrowing. Perspectives of BRICS nations on a common currency. Each BRICS country has a unique stance on this proposed currency. China has long sought to reduce USD reliance, pushing for internationalizing the yuan. It's already trading in yuan with Russia and Brazil, especially in energy exports. India, cautious about fully adopting a BRICS currency, sees the benefits but is careful about balancing trade ties with both the West and BRICS. Russia, heavily sanctioned by the West, is vocal in supporting reduced dependence on the U.S. dollar, with increased use of the ruble and yuan. Brazil sees a BRICS currency as a way to enhance trade with other BRICS members, particularly for its agricultural and raw material exports. South Africa supports the currency idea, hoping it strengthens regional integration and reduces dependence on the dollar. Challenges for implementing a BRICS currency. A unified BRICS currency would face challenges such as differing economic priorities, inflation rates, and financial policies. Gaining global trust in the new currency would also take time. The geopolitical risks are real. Moving away from the USD could invite resistance from the US, which has historically protected its currency's global role. The future outlook. Why USD is still crucial. Despite BRICS ambitions, the US dollar remains vital in global finance. The U.S. government should recognize this and foster stronger economic ties with emerging powers like India and Brazil. By doing so, the U.S. can ensure that the USD remains central to global trade. A balanced trade framework that engages India and Brazil will help maintain the global dominance of the U.S. dollar, benefiting all nations. The U.S. must adapt, engage, and strengthen its influence in an increasingly multipolar world economy. Conclusion. Engaging India and Brazil for a balanced global trade system. The potential for a BRICS currency will take time to develop, but its impact on global trade and the U.S. dollar cannot be ignored. For now, the U.S. dollar still plays a central role, but as BRICS grows, so does its economic influence. To maintain its position, the U.S. should focus on strengthening ties with emerging powers like India and Brazil, ensuring that the dollar remains at the heart of global trade.